Have you ever stopped to think about how you'd begin investing if all you had was $200? At first, that might sound like too little to matter. Maybe even make you believe that wealth building is something only the wealthy can access, those with thousands or millions to spare. But that's far from the truth. With the right attitude and smart choices, even a small amount like $200 can be the spark that sets your journey toward financial transformation in motion. Today, I'm going to walk you through exactly what I would do if I had just $200 to begin investing. And this isn't theoretical advice. This is a practical, realistic plan based on years of studying personal finance, behavioral economics, and helping people from all walks of life improve their relationship with money. Stick with me until the end, because you're not just going to hear about options. You're going to walk away with a concrete action plan that can set you on the path to financial freedom, no matter where you're starting from. Let's be honest. A lot of people believe that investing is only for the rich. They think you need at least $5,000 or $10,000 to even consider the stock market, mutual funds, or real estate. And this belief keeps millions of people on the sidelines. It paralyzes them. They wait, hoping that one day they'll have enough to start, but that day never comes. The result: years or even decades of working hard, paying bills, and wondering why they never seem to get ahead financially. Maybe you've felt this yourself. You work hard every month, maybe even more than one job. You try to save, but by the end of the month, there's hardly anything left. Investing feels like a luxury, not a priority. The bills keep coming, and so does the stress. But what if I told you that the amount you start with doesn't matter nearly as much as the decision to start? That even a small amount, handled wisely, can grow into something meaningful? That's not just motivational talk. It's a fact backed by math, history, and the habits of self-made millionaires. So let's break the cycle of financial stagnation. Let's take those $200 and use them in a way that brings results. We're going to follow a plan based on 3 essential principles: security, growth, and multiplication. Each of these stages builds on the previous one, allowing your money not only to be protected but to grow and eventually multiply. Step 1. Build your emergency fund before we do anything else. The first step is to create a financial cushion. This is your emergency fund. Think of it as your personal safety net, your financial shield against the unexpected. Life happens. Your car breaks down. Your pet needs emergency care. Your hours at work get cut. Without an emergency fund, any of these situations could force you to go into debt or sell your investments at a loss. And that's the fastest way to undo your progress. So here's what I recommend. Set aside a portion of your $200 to begin this fund. Even if it's just $50 or $100, it's a start. The goal is to eventually build this fund to cover 3 to 6 months of your essential expenses. But for now, the most important thing is momentum. Starting the habit. Where should you keep this money? Ideally in a high-yield savings account or a money market fund. These are low-risk, accessible accounts that allow your money to grow while staying liquid, meaning you can access it quickly if needed. Step 2. Grow safely with fixed income investments once you've got that small buffer in place. It's time to start thinking about growth, but we're still going to keep things safe. That's where fixed income investments come in. In the United States, there are a few accessible and reliable options even with small amounts of capital. For example, certificates of deposit. Many banks allow you to open a CD with as little as $100. You lock in your money for a set period and receive a guaranteed return. U.S. Treasury bonds. Through the Treasury Direct website, you can invest in bonds with no fees and very low risk. High-yield bonds or bond ETFs. These funds are available on investment platforms and offer slightly higher returns in exchange for a bit more risk, but still within a stable range. For example, you could allocate $50, $100 of your initial $200 into a 1-year CD or a treasury bond, knowing that your money is growing without high volatility. This step isn't about huge profits. It's about building the habit of making your money work for you, safely. Step 3. Generate passive income with REITs. Now that we've built some security and started growing your base, it's time to think about income. More specifically, passive income. Money that comes in without you trading time for it. Real estate investment trusts, or REITs, are a great way to do this. They allow you to invest in real estate like apartment buildings, shopping centers, hospitals, and more without needing to buy property. Many REITs are traded on stock exchanges just like regular stocks. This means you can invest in them with as little as $10, $50 per share through platforms like Fidelity, Charles Schwab, or apps like Robinhood. Some REITs pay monthly or quarterly dividends, which is money deposited into your account just for holding the investment. That's cash flow you can reinvest or use. Imagine this. You invest $50 in a REIT that pays 5% annually. It's $2.50 a year. Now multiply that by consistent contributions, reinvesting dividends, and letting it compound over 5 or 10 years. That small trickle can turn into a steady stream. Step 4. Invest in stocks and ETFs for long-term growth. We're stepping into the area that builds long-term wealth. The stock market. But instead of picking risky stocks, we'll focus on ETFs, exchange-traded funds. ETFs are like baskets that hold dozens or hundreds of different stocks. For example, VU tracks the S&P 500, the 500 largest U.S. companies. QQQ focuses on technology companies in the NASDAQ index. VTI covers the entire U.S. stock market in one fund. With your $200, you could buy one share of one ETF or split it across multiple depending on the platform. Some platforms even allow fractional shares, meaning you can invest any amount, not just the price of a full share. The magic here is consistency. If you invest $20 or $50 every month and reinvest any dividends, you're building momentum. Over time, your portfolio grows through both contributions and compounding. Step 5. Invest in knowledge. One of the best investments you'll ever make isn't in stocks, real estate, or crypto. It's in you. Financial education transforms everything. When you understand how money works, how compound interest functions, and how to avoid emotional investing, you become powerful. Books like The Psychology of Money by Morgan Housel teach mindset. Rich Dad Poor Dad by Robert Kiyosaki introduces the concept of assets versus liabilities in an easy-to-understand way. Online platforms like Udemy, Coursera, and Skillshare offer courses on investing, business, budgeting, and more, often for under $20. Imagine taking $50 from your $200 and turning it into knowledge that helps you avoid thousands of dollars in mistakes. That's a fantastic return. Step 6. Start a simple side business if you've got a creative or entrepreneurial spirit. Consider using part of your $200 to start a side hustle. There are dozens of low-cost online businesses you can start today. Sell digital products on Etsy. Offer freelance services on Fiverr. Do affiliate marketing, where you earn a commission promoting other people's products. Print demands stores that sell custom shirts or mugs without upfront inventory. Let's say you spend $100 setting up a basic website and launching ads or using tools. You make your first $20, then you reinvest it. Slowly, you scale. Before long, you've turned $200 into a consistent revenue stream. Step 7. Explore cryptocurrencies. Cryptocurrencies are volatile and not for the faint of heart, but they do offer potential for growth, especially if you allocate only a small portion of your funds. With $20, $40, you can experiment with crypto by buying Bitcoin, Ethereum, or exploring crypto ETFs. Use platforms like Coinbase or Kraken and avoid putting all your money into coins you don't understand. Focus on learning how this market works. You're not trying to get rich quick. You're trying to understand a new asset class. Putting it all together, let's recap and build a sample plan for it's $200. $50 into a high-yield savings account for your emergency fund, $50 into a fixed income option, $30 into a REIT for passive income, $40 into an ETF like VU or QQQ for long-term growth, $20 for a personal finance course, or book $10 into a small business idea or crypto experiment. This isn't just a plan, it's a roadmap to a new financial mindset. The most important takeaway? You don't need thousands of dollars to start. What you need is a decision, a plan, and the discipline to follow through. Start small, stay consistent, keep learning, and watch how $200 can grow into much more. Now it's your turn. Choose your first step. Open an account, invest in yourself, build a habit. Don't wait for the perfect time, because that time is now. If this guide helped you, like, share, and comment which strategy you'll apply first. And don't forget to subscribe and turn on notifications for more tips on how to build wealth from wherever you are. See you in the next video.